Hello everybody, this is Max Farrow. In the next video that we're going to be doing right now, we're going to talk about our process here called the over-under strategy. Now I'm doing this from a previous webinar that we had made where I'm taking the bits and pieces that I was talking about in that system and sort of patch them together so you can get a better understanding of it. This will be good for now until later on as you can attend more meetings and practice more. If you have any questions, please go to the Discord unit or the customer service area to help you get those answers you're looking for. We'll see you at the end. It's called the over-under strategy. And this is something that David Meny uses. It's something that a handful of other people use. Some people say it has quelled the thirst of trades and by allowing me just to trade minimally, but yet these kind of success numbers. And I'm pretty sure that other people have started to trade the first over, first under process, which refers to the MA. And we'll talk about that here in a second. But the concept of finding a strategy and standing on top of its head to do what you can do to trade it, these are the type of results you have. Okay, so there are other people, and I'm just going through. Ben's not really putting anything up yet. I'm JRS Live. I'm not sure who this one is yet, but he hasn't made any trades in several days. We'll take his off. Let's see it on test. We'll take that out of there. There are other people. Here is Wesley results. Still nothing since the 10th. I don't know if there's anything else on there. It doesn't look like it. The consistency of your trading is all about how much time you can put into it. Here's Jeff C. Great work, bud. Great work. You're doing a wonderful job. If you're watching this after the fact, I don't know if you're in the room today, but boy, you've come a long way. I mean, this is July. This is working very well for you. You came into a little bit of a heartthrob in the very beginning. It looks like you've come out pretty well. I'm not sure if you're using the over-under. We'll probably have, oh yeah, okay, under trade. Look at that. Beautiful, right? Lots of detail, lots of information. This is good. This is a good way. This is a great way to handle your trading style. This is going to tell you if things do go wrong, how many times you do an under trade and it comes successfully. How many times should you do the first over or what have you. He even says how many candles it came back. He's watching it. He's learning from it. The longer you sit and you stare at these, and even though that I told you yesterday, don't sit and watch the market, right? In the very beginning, when you're trading in demo, you should watch the market. You should see how it behaves because you'll get a taste for why not to touch it afterwards, right? But you also get to see how it responds. You don't need to sit and watch the market. You can look at back history. So let's do this. Let's talk about what the over-under strategy is. Now, originally, when we first started trading the Dex Atomic, we would wait to simulate what the trend was, which is set here by the MA, the moving average, the blue line here, and which is dotted now. And once the blue line started to travel in a process of giving you a trend evaluation, like an upward trend, you would wait for an arrow that went with the trend, then wait for negation, and then waited for another arrow to go with the trend. And this was your best signal. Okay, that was the original strategy called the Dex Atomic, okay, the TNT, right? Trend, negation, trade. That's what the TNT stood for. But then as we started to develop the Dex Atomic, we found that just about every single arrow had a potential to be a trade. Whether it be a winning or losing trade was really dependent upon the market and how things evaluated. But then we started to see another pattern come aboard. And we've seen this a long time ago. And I gave this over-under strategy a lot of solution in the very beginning. And if we go down here, we'll look at, I think it's the structures. It's somewhere within the process here. I'd have to find out exactly where that video is. But the over-under strategy is talked about. But here we're focusing on it as being the primary. So what does it mean? And then I'm going to show you how to trade it and pull your prices of where you're going to be trading at those levels and when to trade at certain levels and when not. We're going to use the AUD USD. We're going to use the top 5. We're going to have a look at them in each one of them. And I'm going to scroll back about maybe a couple of hours, maybe a half a day. Who knows? We'll see. And we're going to go down the 5 main pairs here, and we're going to have a look. I suggest this is how you read your morning or your week, or you go back and you look to see how the market evaluates. And we call this paper trading, right? This is just a back test, quick slide back test to look to see how the market's validating the over-under strategy. Now, the over-under strategy first starts off on either that you're above, the price is above the MA or below the MA. Now, this is the moving average, right? It's done by 50. That means the last 50 bars of the average of the price of the movement of the market. Okay, it's the MA 50. That's what we have here. And what we do is we wait for the price of the open arrow for a sell on under, okay, to be below the market of that MA. So even though that this arrow on the back test is above, it actually started out down here, because remember, it's the open of the arrow itself, of the arrow bar, which is right here. And that bar was below the market. It was below that moving average. And it would be the first one that was below after it had been already above. See, so when it was above and it came down below, that arrow would appear here. And where would we have put our market? So before I tell you where we would have bought the trade at, we'll talk about the other side of it. So in this particular case, it looks kind of unusual, right? Like that arrow's already up there. But in this case of this arrow, it's the first one above. Now, there are some rules that I like to commit to. Between 5 to 10 arrows or 5 to 10 bars, we don't want too many bars. Okay, I usually like between 5 and 10. Okay, so how many bars after the bar that crosses it do you use? 1, 2, 3, 4, 5. And this is right around the edge of it, right? So this is about 5 bars after it's been pushed down below. On this one here, 1, 2, 3, or 1, 2, 3, 4, 5, 6, 7, 8, 9, right about 8, right in that area. This is still pretty outside that it's within the acceptable means. And what I normally say is that the further out it goes and the further away from the MA it is, the more likely it is probably to fail. Okay, so these are little tiny sub strategies to your main strategy of over under that you have to keep in mind. Let's go back some more. Here's another one. Now, the reason why this one, the arrow is down here, is because it has a little wick tail to it, that the market price at one time was back below again. So the signal comes out right here. And this one's considered an over because it's above the line and it's a buy strategy. Now, the first one that comes out is this one over here, and it is more than 5 to 10 bars. So we wouldn't take this trade. Now, there's sometimes now you're going to get a natural loss to the process. This isn't a 100% strategy. This comes out. We said 5 to 10 bars. And depending on where you placed your statement price, this is about where I would have been. I would have came back to this process right here, to this area right here, because it's the first little negation, right? The first little part of dynamic structure here. And I want to be on the bottom of that structure. Okay. On the buy side, when you're looking for a buy, you want to be on the bottom of the structure. And when you're on a sell, you want to be on the top of the structure, which I'll show you in a minute. And does this one, I don't know if this one won. Let's have a look real quick. No, it lost. But that's okay because we've won 4 or 5 others already. Let's keep going back. Here's one here. Where do we go back to? Come back up to the first set of negation there, which is right here. And there we go. Now, whether or not you would be able to get it $45 is another statement. I think you may have, because there's only 2 pips from here to here. This could be definitely one that you would have been able to get. Let's go drop down and look at the Euro JPY. Now, what about when times happen when your over under creates to this kind of market, right? Where it just goes under just a little bit and then comes back up. Well, this sort of resets the market. It brings it back to the mean, right? It's always coming back because what's the moving average? The moving average is the mean. It's always coming back to the mean. It's always going to try to come back to the mean, of course. So I would kind of take this as a process that it has checked itself and now it's going back up again. Okay. So you would use this as another over again, the first over. We come back down here. We look at this one that's sort of checked, bounced through, stayed there for a minute. And then 1, 2, 3, 4, 5, 6, 7. We come back to here. This little first little divot, you know, so if you're on a buy, you're looking for the red. If you're on a sell, you're looking for the first little green that you come to, right? That you have to go down to, but this one, we want to use that one. But you get what I'm saying here. We come to here, which would have definitely have filled at the 45 because it actually went OTM for a minute. And off you go. Now you can also use dynamic structure. You may not get filled up or even hard structure like this. But for me, this backs it up a little bit for me. 121.75, 120.79, only about 4 pips difference. But still, it would have went OTM for a little bit. You could have bought some OTM trades at that point. Maybe not for much, but still. The first one. Now, in this particular case, I would have looked how far back does it take to that very first green or structure, right? You can go back to the MA, to where that bar crosses the MA right there. And remember, this is the field of your process. Is not to go to Nadex and say, oh, well, this arrow doesn't have any money on it. Let me put this one here because it's the closest one with money on it. Let me just go in and use the first statement off of that. If you come down to here and this first negation bar, okay, against your trade is right here, or you're back to structure the MA, and there's nothing on it, put a working order on and let it do its job. Remember, you're looking for these coincidences of movement and structure, right? Where's the coincidence here? From here to here, throughout this little dyad of pushes and head and shoulders and whatever else you want to call them. Okay. Now you wouldn't have been able to see over here, but look at it. It goes like clockwork. Boom, bounces off, and just at the last bar wins. You know, you would have gotten filled right here and won easily. So my point being is that start following the structure of the process itself. And what you're doing is you're going back, like in this particular case, this is where it's on. That's why I like going down the list here, because we get many different models. You got an arrow. Here's where the first structure is, right? Now you wouldn't go to the top of that structure. You would go to the bottom of the structure, right? Right here. So this is like an at the money trade almost immediately when that first bar, but see, you wouldn't know that this bar was green, right? And you can't go into the strike. You have to go back down below the strike, below where you opened at. So that would be all the way down here. Would you have gotten filled? Or you can go into a structure, like heavy structure. Like if you get two reds like this, you want to be in the mean, right? And where's the mean? In the middle of those. Boom, just right there. And again, coincidentally, the mean of these two bars is exactly where that red bar opens up at, or has a low at. Isn't that kind of coincidental? Well, that would have gotten you filled for $45 easy, and there you go off on the win. You have to understand where your structures are at. Let's go back and look at it one more. Now, here's where we get a little bit of offset, because there's a battle happening here, right? So where is the arrow when it first came out? Was it just above? Was it just below? Well, if the rule is that the price should be above, it's not just the arrow, but the price on the open price should be above the MA. If it's right at the MA, you're flipping a coin. That's all you're doing. There's no statistics, too many statistics to show on how many times this happens. I don't know. You're going to have to live that experience yourself. It could be 55%. It could be 80%. We don't know. For me, any process that I go, I wonder if I should, is an answer for no. Let me see what happens if I know. That's for demo. If you do it in demo, then mark it. How much time does it take to market that information? Doesn't take much. Did an under trade right at the MA. Boom. Put a big old bold statement in there, what have you. Doesn't take much. Doesn't take much to keep a journal and figure out how much you need to trade. So we have this little up and over and down, and it's like, is this the first one or is that the first one? Well, this is the first one. And then it pops over and it comes right back down. And then this one, what about this one? What do I do here, Max? Well, remember, you can't come, this is at the money. You're looking for the first green that's above, right? Because you don't know that that bar is green yet, because when this arrow first came out, it was down here. So you would come back up to here, to the top of the structure of where that bar is, not the bottom, but the top. And this is where you would place your statement price, at that line. Within reason, you know, if you have a statement price that it's down, if you have a statement on Nadex that's down here, do you do it? The answer is no. You're not coming into your trade. You're always going out for safety. So let's see if it won. There's a 55 right there. Barely, but it won. Barely, but it did win. Let's go back. Keep looking, Euro USD. Let's go down to the Great Britain Pound USD and see how well it operated over the last couple of days. Here, back to the first structure. Did it get bought? Possibly not. Is where we would have gotten in here. This one probably wouldn't have gotten bought. This was above, back to first structure. We go to the below that structure right there, would have won. Back to here. Top of the structure. Possible win here, 25.50 to 25.49. Yeah, this would have gotten picked up at the 45 because it came back to the money at this wick right here. Now, I'm not trying to cherry pick. I can tell you that right now. I'm not in for that. This one would be a little bit hard for me to digest because it was done on a railroad track here. Boom, boom. You know, was this a push up? Was this really the first one? 1, 2, 3, 4, 5, 6, 7, 8. This would have been a little bit tough for me, but even if I were to do it, I would come back to safety area, which would have been right here. I would have put a working order on, and guess what? I wouldn't have gotten picked up. But that's okay. You're not going to get picked up on all of them. But I also know the ones where I put it to safety at, right? If I'm here and I'm on this red right now, I come back to my first red down here. I may not have gotten picked up from this bar, 2,600 to 697, 3 pips, maybe, maybe not. I'm not sure. Get an aggressive market maker, maybe. Okay. Price is above here. Now this is a big hit into the fail side. Price goes up, comes down a couple of bars, signal comes out. We go back to, remember, we're going back to first red. That's not here. That's not into the trade. And that's here. And this would have been a loss if you would have taken that trade. First one down, boom, right there, another loss. Win, because it's the first one over. And then the beginning of the week. USDJPY. So what I implore you to do is to get yourself onto a chart and do what I'm doing right now. Just going back and looking. Let me do that one again. Going back and looking at the values of the over under and see where you would have gotten in and how it would have worked for you. For this particular one, up to here, right? Because we're heading down, we're looking back for the first, because we would have started here. We can't be down in the trade, remember? So we got to go back to the first one and we got to be at the top of that structure, and that's all the way there. If you follow those rules, you're going to get a lot of working orders put on, but they're going to be safe. They're going to be strong. Picked up right here, an easy win. Now, could you do the same thing during all these other trades? And the answer is yes, but your success rates are going to lower. Your more trades you're going to get, you're going to be a lot lower, 64, 65% rather than 70, 80%. But you're going to get into a lot more trades. But then that's where the great debate comes in. Do you need a lot of trades? Well, people like Jeff, who don't really do a lot of trades right now, I don't think he does need a lot of trades. Do you? I mean, I'm looking at the market. There's 2 trades. There's 2, 3, 4. There's 1, 2, 3. So 3 trades in a day. 4, 5, 6 trades. There's 6 trades in one day. You know, so it's not very many. We're not talking 56. I mean, we give out thousands of signals. Do you need that many? The answer is no. You don't need that many. I mean, look how successful David Many. This is still, since he's gone live, and then for this month so far, $1,084. He's still on track for about a $2,000, $2,500 a month using 1 contract at a time. I spoke to him yesterday. I said, when do you plan to go for 2 contracts at a time? It's not enough for a while. I'm comfortable here. I make well beyond what I need. And I'm impressed by that. I'm impressed that ideal of greed or need is very decisive for him. And it's strong. This is a reality for him. Being retired, sitting down, how much work does he have to do in a day? Well, these 2 trades came out at the same exact time. He was able to decipher and get into both of them. And he did well. He made his money. This is his day yesterday. For the 13th, made 117. I think his daily goal is $100. What can any one of you do with $100 extra a day? So if this doesn't fit your means, it's not to trade more trades. It's just to trade more consistently and then add volume, like we've always been talking about. You then guys are going to get really, really tired of hearing CVG. But then your life is going to change a lot because CVG is going to be your life with this. If I sat down every single day and just found 2 trades, let's just pretend that I'm David Menning for a moment. But I'm Max Farrow's mentality of, you know, my need is a lot more. Maybe I'm $8,000 a month that I need. He's on average to hit $2,000 for the month, right? If we look at that, it's the 14th of the month right now, and let's just pretend that we're about halfway through the month, right? We're pretty close. So we could probably be hitting about $2,200, $2,300 for the month. Trading 1 contract at a time. Now he's easy. I need to make $8,000 a month doing the same kind of mentality. Well, simply just add 3 more contracts and I'm at 4. Now I got my $8,000. So it's simple. You have to sit down and find the consistency to be in your pocket. And like we talked in yesterday, that just takes time. Doesn't take much, but it takes time. All right, let's jump back over and finish out this little market read. The USD JPY, they all act different. All pairs act differently with the process. Find the pair that you like the most. I mean, seriously, I think there's a, I don't know if he does it on this one. No, he doesn't do it on this one. But there's some people that have like, you know, how many How many pairs work best for me? Okay, here's Jeff Whiteman's. Just thank you, by the way. This is awesome. He made me like, I hate the Euro JPY. Won't ever trade it. None of the other ones are it. He doesn't trade any of these. Okay, so his trading is, I am all about getting the data, but these are the main pairs that I want to trade. There's the 5 masters. Here's the secondaries. Hasn't really traded much of the secondaries. Looks like more of his masters, and it looks like he favors and does the best on USD JPY. You see? He has the best success rate on the Euro USD, but for some reason, he's making better money on, he's getting more trades on the USD JPY on the over-under, or if that's what he's trading on the over-under. Yep, looks like it. So start finding your pattern with it. Start finding your availability on what you want to trade. Some of you might trade the over under at the money, right? When the first one comes over, just trade at the money and you'll have that success rate. For me, you might come back to dynamic structure, which may not be something that's close to where you're at. You may not coming down to here. You might look at previous structure. You might draw some more lines in. That could have been a line for you, which would have extended over here, which would have been a pickup. Yeah, 1 pip off. Yeah. But you remember, you're not here to try to make a trade happen. You're here to find where's the best success for me to trade with, right? If you're in this red's the first over, your dynamic structure's all the way up here, or even here. If you use the structure, the superstructure of the support and resistance area, this was a big win. If not, it was a working order and just another working order in the dust, if you will. Okay. So there's going to be things you learn along the way, but the over-under strategy here is the first one that's over. If you get a lot of indecision, like there's a lot of this happening, blah, 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 and a big giant gap, you know, I think this is the beginning of the week gap. Okay. But if you get like a lot of just indecision happening, like, let me see. All right. So here you got a big, here's where the success rates really come in, is that you get a big push down and then it slowly swoops up and comes up here. This is where the best successes are. Where the failures start to happen is like when you get a little push down and a little push back up, a little push back down, and then it just goes against the next one that it goes up on. Okay, this is the previous week gap, right? Because even though that this one is where this is the very first signal of the week, we call this the card burn, this has a very low rate of success. Okay. But where we see the best rate of successes is when the market proves itself, goes well beyond, and then comes back down. Not just a flip over, flip under. Technical price being over and price being over are two different things, right? Technically, this price is just over. It might be a half a pip, right? But does that necessarily mean that you should get into that trade and apply all the other science to it? And the answer is no. I mean, look how long, technically the price is below, right? But how many bars over? Technically, it could fit in. But at one point or another, you're going to have to say to yourself, okay, this is way too far away. It's a possibility it could come back to the mean, just sweep back up here. But if you have these lines for you, if you have these support lines for you, use them, right? But remember, every time that you come into the trade and you try to use a support line, or you're going to come back to, first negation structure, that's your decision to make. I'm giving you those options. If you do that, look for reasons left to be in the trade. Red lines are very strong. So don't get me wrong. These are very strong lines. These have a very high rate of success. Okay. So if you get one that you're down here and the price comes out and you're like, all right, I'm going to come back to this structure. It's really strong. You would have benefited. Does it benefit them all? The answer is no. This is the first one that's over right here. Where would you come back to? Well, there's no main structure. So here, that's right here. You may not have gotten bought, but this would have been following the rule. All right. So is anybody, as of right now, I wanted to be able to show you this structure, and we'll probably, this will be my marker to end the video where I'm going to be showing everybody. And I want you to understand one thing. The main rules of the over-under will protect you. Use a working order. Make sure that, you know, you don't have to technically follow the rule of it. You know, if let me see if I can find one real quick. Just because the arrow is just a micro hair over, oh, that's one of them, I got to do it. Let's do it right now. If you get this big, huge movement of process happening, right? Like this huge, giant movement, return, right? Impulse return back to market value. Is this something that I would want to mess with? And the answer is no. If you get there and there's 75 bull news happening, right? There's like all this nonsense is just happening. You're like, sure, but technically it's over. Yeah, you know what? It's probably going to get wrecked with all the news. It's probably going to get punched in the face. What you're looking for is calm, steady markets that have definite swooping value. All right. So don't trade so technically. Start seeing what the market is for what the market is applying for you at that point. Technically, this one's all the way down here. Could you use a support? Yes. But this is a lot of movement. And when you get this big movement, it's always trying to come back to the mean. And if it doesn't, it's going to continue on the trend. You got to ask yourself how for how long. Like if you're trading just the over under strategy, would you trade any of these other trades? Hindsight's 20/20. So you're probably saying, yeah, I would. Okay, so again, get in, start finding out what your levels are, find out what pairs you want to trade on, and we'll go from there. All right. Appreciate your time. Does anybody have any questions whatsoever? All right, so I do appreciate you hanging out with us. If you do have questions, please reach out through Discord in one of the channels for the den and or in the green room. If you have problems or any issues, please reach out to us to customer service with the 3 little dots that are on the web page all the way down in the right-hand corner. That will get you our customer service. I'm Max Farrell. This is DexFXMarkets.com. We'll see you next time. And as always, trade well.